The VIX settling back down after it spiked earlier this week. Joining us now with his view on the market sell-off, what comes next, Scott Chronert, head of U.S. equity strategy at Citi Research. What were you thinking when it got above, how high did it get, Scott? Do you see it that day? It was well above 50, wasn't it?
It got well above 50, yeah, Joe. I mean, I'd say obviously it's a shock because we've been living in this low VIX regime for quite some time now. But heck, going back in our ETF work over the years, I think there's been a strong, group of traders out there that when they see these volatility spikes, there's a natural proclivity to want to sell into it because the roll feature that comes with the ETFs on the VIX usually means that there's a better odds that the elevated VIX won't usually persist.
Do you think at this point the highs have been seen on the VIX? I guess that's the same as saying, do you think that the panic that we saw on Monday was that just a one-off, or was it the start of something that could lead maybe to us thinking that maybe the soft landing narrative is suspect?
Well, I think you touched on the key point. I'm not in position to comment on where the VIX is going from here, but these spikes usually are not long lasting. But what I would say in terms of what's transpired, been a lot of discussion around carry trade. There's been a lot of discussion around degrossing. All of this probably feeds into the same narrative that many investors were kind of caught positioned down the path that got upended on three fronts. You lost some of your AI conviction with the NVIDIA news. You've lost some of your soft landing conviction as we're looking at the more recent economic data pointing to higher conviction of a Fed pivot. And then on the election side, there was a very strong view that, you had a pro-business Trump lead that now has been erased. So all three of the forces that in our view had been supporting the market as we were at or near recent highs have had some doubt brought into play, and that's quickly been reflected to a point where we think we're more confident that we're getting close to having priced a lot of that concern in.
Do you think at this point, looking at technical data that we're seeing, Scott, is the lag effect of all the things that the Fed did, is there more to come? Have they been too restrictive? Have they stayed too long in your view? I know that's maybe not what you normally comment on, but are you worried about that?
Yeah, look, my view has been that the Fed loses the narrative, and that's my been concern is that you hold an aggressive hawkish stance too long. You don't allow for the fact that economic data, as it's reported, will tend to be lagging the underlying fundamental circumstance. And you wake up and you find that economic activity has been, in a decelerating mode, and now you have to go into overdrive and attempt to pull it out, right, with a more aggressive response, which is now what's happening, right? So the good news, if you will, is that we're now talking about here at Citi, two back-to-back 50 basis point cuts, September and November, then another 25 in December. So you're looking at a more aggressive response. Now I have to navigate what all this means for earnings via, economic sensitivity. And I got to tell you, Joe, our view has been pretty consistent here that we think you have to be clear on differentiating the S&P 500, i.e. that definition of Wall Street, from the broader economy in Main Street, where the S&P 5 is beaten to a different drummer fundamentally. So our earnings resilience call that we've been on for some time now doesn't change. I think what has changed is the positioning setup that on those three fronts that I mentioned have been sort of upended here. The pullback that we've had has alleviated a lot of the concern in terms of too aggressive growth expectations being priced in. So, yeah, we're now back to a point where I think we're looking at a more reasonable setup. Whether we're at the very end of this, very hard to say. As you go into periods of transition from Fed hawkish to Fed dovish or less restrictive, the volatility pickup usually is notable during those time frames. Economic activity does tend to kind of come in, and fundamentals can be under pressure. So even though we're getting closer to a more aggressive Fed pivot, doesn't mean coast is clear, but it sure means that we're setting up for a more traditional early cycle rotation.